everyone, Dave here and ready to start what matters. Now in this video, what matters is 5 ways to grow your money in your 20s. So bagong graduate, or maybe you found your first work already, don't know yet what to do with your first paycheck, or you may have been working for quite some time already but is only starting to think about the future and would like to save and invest now. In any case, this video is here to help you understand where to allocate your money and how to start your own personal finance journey. So by the way, though I've been doing seminars for quite some time already, I've been encouraged by my friends and the people who've attended my seminars to start my own YouTube series so that I can help expand my reach and hopefully help more people. I would really appreciate if you subscribe. There will definitely be more videos very soon that would interest you. Okay, so what would actually guide us in our personal finance journey? So what I have here is the financial planning pyramid. It has 3 levels. Ano nga ba yun? So number 1 would be wealth protection, and then level 2 would be wealth accumulation, and lastly, number 3 is wealth transfer. Now let's start with level 1. Ang mga kailangan natin would be savings and our emergency fund. Having savings and emergency fund would actually protect us from uncertainties. So that's why level 1, lahat tayo mag-start. Then level 2 would be wealth accumulation. Ito na yung you're making your money work harder, and this is where our video would actually revolve around. This is where you build your education fund for your future family, for your future children, or maybe your retirement fund, or maybe business venture, and even home ownership. So mga big expenses and other investments that you can make. The last part in our financial planning pyramid is the level 3. So, ano naman to? Ito yung wealth transfer. So, you're preparing already to transfer your inheritance or to transfer your legacy, your wealth, to your beneficiaries to allow them to have a better future. So, now we know what would guide us in our own personal finance journey with level 1, level 2, and level 3. So, alam natin saan mag-start. Alright, topic number 1 is to know your why or have a why. So, bakit mo ba gusto mag-save? Bakit mo ba gusto mag-invest? So, in my case, I actually want to retire kasi when I'm 45 or 50. So that is my why. Another example will be, gusto mo kasi bumili ng house when you're 30, or maybe gusto mo magkaroon ng bagong kotse. Or it can even be as simple as gusto mo lang man libre every weekend with your family, for example, lunch and dinner. But remember guys, we cannot give what we do not have yet. So knowing your why also helps you translate an idea to actionable steps. So number 2 would be saving. Now, bakit ba kailangan mag-save? Because again, it helps you with level 1 and level 2. So you're building your emergency fund, you're building also your financial resources to be able to invest with that money. Now, how do we save? So we have to budget. Now, the easiest budget formula there is the 50-30-20 rule. Okay, so ano ba yun? Paano ba nangyayari yun? Or how can it help us? First one, the 50% goes to the essentials. So the essentials are your fixed expenses. So ano ba to? Example, these are your utilities, maybe your water, your electricity, your bills, your credit card bills, nandyan yan, debt repayments, so may utang ka sa bank. And then nandyan rin of course your transportation, maybe going to the office and then going back home. Your food, your daily expenses for food. And then of course your contribution to the household, so you're giving money for your family. So those are the essentials, which is 50%. So 30% naman is going to your lifestyle. Ano ibig sabihin nun? Hindi naman porkit kailangan natin mag-budget or mag-save. Ibig sabihin, i-deprive na natin yung sarili natin of the things that we want to have and the things that we want to consume, di ba? So example, it can be going out with your friends, with your family, go to watch a movie, entertainment. Nandyan rin yung building your passion. For example, you have a hobby, gusto mag-paint, gusto mo bumili ng plants and all. Very relevant now, dami bibili ng halaman, ganyan. And last one, the most important, is of course the 20%. So para saan ba to? Ito na yung para makapag-save tayo and makapag-invest tayo. So we need to set aside 20% of our income. Hindi naman siya fixed. You can actually interchange the lifestyle and the savings. So instead na 30% yung lifestyle, 20% yung savings, ibabalik na rin mo siya. So 20-30. It really depends on you and how you're comfortable. It really depends on you and how you're comfortable in adjusting your own budget formula. So ang magandang quote to have here is live below your means. The more common is live within your means. But if you actually live within your means, you're not allowing yourself to save enough because you're spending at the rate of your income. So living below your means allows us to apply delayed gratification. So ano yun? Ibig sabihin, lahat naman tayo gusto ng bagong phone, lahat naman tayo gusto bagong kotse, sino bang may ayaw, di ba? But if you delay that, living below your means, you're actually saving enough right now to be able to even buy better things in the future. So ayan, okay, so alam na natin paano mag-save and mag-budget. Number 3 is debt management. Ito na, so mga utang. Lahat nga ba ng utang masama? So actually, hindi. So there are two categories. There's good debt and there's bad debt. Now, focus muna tayo dun sa bad kasi yun yung usual na nangyayari with us. So bad debt is basically umuutang ka to buy things that you don't need or you're overspending on things that you don't need on credit. So you bought a car for 1.4 million or 1.3 million for example, and then after 5 years, it of course depreciates in value. So you bought it at 1.3 million, ngayon 700,000 na lang siya, 500,000 na lang siya. Bad debt is basically you're buying things that depreciate in value over time. So it can be for a number of reasons. Gusto mo lang for example mag-show off, or you may have spent more than what you're capable of. Dapat, for example, murang phone lang or average phone lang, bumili ka ng hindi mo kailangan, masyado mahal. So, that's where we have to avoid spending. So, next one naman would be good debt. Ano naman to? So, good debt is you're using credit or you're using utang para mag-generate ng more money. So, for example, kanina sa earlier example natin is personal car for yourself. Ngayon naman, ang example natin for good debt is maybe a new truck. So truck to help you logistically, helps you build money because you're using it for transferring your goods and services. Maybe you have a business. Another example would be umutang ka sa bangko, for example, to buy a house or a rental property. So itong mga to, it helps you build wealth over time because of rental, may rental income, and then actually the property that you bought will have capital appreciation, meaning tumataas yung value niya over time. So yung isa, bad debt, you bought something, pababa yung value over time versus good debt, umutang ka and you purchase something and then after a few years, umaakit yung value. Mas madali siyang bayaran because the things that you purchase on credit will actually help you build wealth and of course, pay for the loans that you got. Okay, so yan yung mga examples for good debt and bad debt. So hopefully, we know what to choose moving on. So of course, ito is a good debt. Ayan. Now we know how to save, how to budget, and know the differences as well with bad debt and good debt. So number 4 would be investing. Eto na. With saving, nag-iipon ka lang. And then fixed interest siya because of your savings account like 0.25%. Now with investing, hindi siya fixed interest because you're actually allowing yourself to earn more. There's actually potential to earn more because you're placing your money in financial assets or financial vehicles that has the potential to gain higher returns over time. So ayan. So that's the difference between saving and investing muna. Now, what are the ways to invest your money in your 20s? Ano ba yung mga pinakamadali? So the first investment that I'll share is UITF or mutual fund. This is actually a great way to build wealth over time na hindi masyadong kailangan binabantayan. So with UITF or mutual fund, there are actually 4 major fund types. The first major fund type is money market. So saan ba nakalagay yung money market? Nakalagay siya sa short-term securities. So pag sinabing securities, basically, utang siya to the public from a government or from a company. So, utang siya with the guarantee of a fixed interest over a period of time. Magkano naman yung kikitain ko pag naglagay ako sa money market? So, the growth over time, historically, has been 1% to 3% per year. It's actually categorized as a low risk and low return investment. So, ito yung para sa mga hindi risk takers or gusto medyo slow and steady lang. So, that's number 1. The second major fund type would now be bond funds. Ano naman to at saan siya nakalagay? So nakalagay siya sa long-term securities, mid to long-term securities. It can be 3 years up to 7 years and sometimes even 10 years. So ang growth rate naman niya is actually from 3% to 5% per year historically. So ang holding period naman for bond funds is between 1 year to 5 years. So mas matagal siya din money market and it has the higher potential to grow your money. So it's categorized as still a low risk but medium return investment. Next major fund type would be the index fund. Ano naman yung index fund? Pag sinabi nating index fund, it's comprised of the top 30 companies in the Philippines. So, nandiyan yung mga conglomerates like SM, like Ayala Corporation, or BDO. So, it's comprised of different companies in different sectors. It can be industrial, it can be consumer, it can be aviation, it can be utilities. So, if you invest in the index fund, you're actually getting a good cross-section of the Philippine industry. Another reason to invest in the index fund is because ito yung benchmark natin on how our economy is doing. Ano naman yung holding period for this one? So, ang recommended dito is really long-term. So, from 1 year to 10 years, actually even up to 20 years. So, this is actually a great way to build your money because ang average return neto, historically, has been about 6 to 7%. Categorized as a medium risk to high return. So, medium risk siya because there's a chance na medyo bumaba yung market value nito mga top 30 companies. But, it's actually a high return because there's so much potential for these companies to grow. Being invested in index funds allow you to ride that momentum over a long period of time. Okay, Dave, tama na. Alam ko na gagawin. Paano na ba next? Ano nang next step na gagawin natin? So how do you access these funds? So you can access these funds through online banking, sabi ko sa inyo earlier, through BPI, to Metrobank. It's actually being offered also by life insurance companies. So you have Sun Life or Blue Life. So you just have to contact a financial advisor to help you start your own fund. If you want to do it with banks, you can just open an account through online banking and click on investment trust funds. So there you can see the different investments: bond funds, index funds, balance funds, and money market. So the next one to help build your wealth in your 20s is actually a VUL. So ano ba yung VUL? Parang na narinig, parang nagpo-post mga tao dito, mga financial advisor, mga Facebook, Instagram, ganyan. So VUL is actually life insurance plus investment. Life insurance is of course protecting yourself from uncertainties, helping your beneficiaries from financial burden if ever something happens to you. Now that's the first what if, pag may nangyari sa'yo. The next one is, Dave, paano naman kapag hindi ako namatay? Ba't parang lahat sa beneficiaries ko lang? That's where actually the investment part comes in VUL. Saan naman nakalagay yung investment part nito? Baka naman sobrang baba lang. It's actually invested in the 4 major fund types where you can choose from. So pwede kang pumili doon sa major fund types between bond funds, between money market, between index funds, and of course, para sa mga gulong-gulo sa buhay, balance funds. So that's how VUL can help build your wealth in your 20s. So both a selfless act for your beneficiaries and also something for yourself if nothing happens to you. What if walang nangyari? What if may nangyari? The next investment vehicle that we'll be talking about is the pag-ibig MP2. So ito medyo nagiging popular na siya recently. So it's being offered by pag-ibig. It pays naman a dividend every year. When you invest in pag-ibig MP2, there's actually a holding period of 5 years. Pero it can give you a dividend of about, the highest is 8%, 7% to 8% per year. Pag-ibig MP2 is a great way to build your wealth in your 20s because it's government guaranteed. And of course, the 7 to 8% per year is actually very high. So paano naman actually nabibigay ni pag-ibig yung pera nila back to the investors na 7% dividend? So the way they earn their money is actually nag-i-invest rin sila in securities. But the major part is of course, pag-ibig is a provider of home loans. So they provide loans at 6%, at 7%, at 5% rates. So yung income generated from that is binabalik niya to the investors. Paano ba mag-i-invest sa pag-ibig MP2? So you can actually download their forms through their online website or just go to the nearest pag-ibig branch nearest you. Okay, so the last part is bagong-bago. They are called REITs or Real Estate Investment Trusts. So kung naiisip mo na gusto mo magkaroon ng rental income or rental properties pero wala kang millions to invest, this is now your chance. So what are REITs and how do they work? So a REIT is actually a company which owns and manages properties which can generate rental income. So for a company to be classified as a REIT in the Philippines, kailangan 90% of their taxable income ibigay nila in the form of dividends to the investors. That's how you can have a piece of the real estate property at a very, very minimal cost. So the first REIT in the Philippines is a REIT, which is actually owned and managed by Ayala Corporation. So, A-REIT owns 3 properties in Makati and soon another one in Cebu. So, why is REITs recommended for investors in their 20s? Because you can actually enjoy from passive income for a very, very long time. A-REITs is also attractive because it's high liquid. Pwede mo siyang i-buy and sell immediately to convert it into cash. So, the way to access the first REIT in the Philippines is through a broker. So, I'll share here brokers available in the Philippines and in the description below. So with REITs, you're now available to access real estate investing in the Philippines at a fraction of the cost. Hindi milyones, guys. It's actually in the thousands lang. You can actually enjoy REITs already. Now you know 4 different ways of investing to grow your money in your 20s. But wala namang magic na investment. Now what to actually start really depends on your risk appetite. If gusto mo ba medyo conservative or you're an aggressive investor. Yung mga iba kasi gusto chill lang, grow your money matagal, and then maliit lang yung interest, pero safe. Meron rin mga aggressive which takes advantage of volatility. So ito yung mga laban lang, guys. In the short term, there's a chance na bumaba yung pera nila, but in the long term, there's a big opportunity to grow well. It goes back to you being maybe a conservative investor or maybe moderately conservative or aggressive. So working a 9-to-5 job does not restrict you from doing the things that you love and eventually having more streams of income, diba? So your daily life, for example, can be 6 a.m. to 9 a.m. you work out, you study, you meditate, and then from 9 a.m. maybe to 5 p.m. that's where your day job comes in. So it helps pay for the bills And then from 6 p.m. to maybe 9 p.m., now you're working on your side hustle. Another way to build your side hustle is to learn a high income skill and eventually monetize it after. But remember guys, to really start doing what you love and eventually the income would follow. So with that, you're also investing in yourself. You're building your name, you're building your network, you're taking on challenges that will eventually provide confidence for you to take on more difficult tasks that will be rewarding for you. So the earlier you start with investing, the more time your investment can compound over time. So if your salary is your only source of income, you are actually one step away from poverty. That's why we want to build our streams of income through investing in different products and also investing in yourself to be able to remove uncertainties in life. 3 things to remember for today, guys. Start young, be consistent, and think long term. Also want to share a quick verse for today. It's Proverbs 14, verse 3. All hard work brings a profit, but mere talk only leads to poverty. So remember guys, to take action with the knowledge that you've learned today. So dyan nagtatapos yung video natin for today guys. If you've learned anything new today, don't forget to share, like, and subscribe. And if you have friends who you think would benefit from this video, do share it with them. So there will definitely be more videos about saving and investing very soon. And don't forget guys, we are starting what matters today. Thanks for watching.